for the WIP to be accurate, you got to have a budget and an updated one. A good WIP report will show you slippage. Has your gross profit gone down from the original? Are the numbers entered right, or did something bad actually happen?
Welcome to Builders, Budgets, and Beers. I'm Reece Barnes, and I started this podcast to have real conversations about money in the building industry, the wins, the mistakes, and everything in between. I believe builders deserve to feel confident about their finances, and that starts by hearing from others who've been through it too. This industry can be slow to change, but the right stories and the right tools can make profitability feel possible. Let's get into it. Alrighty, mics are hot, Miller.
What's up, man?
We're recording. What's up, dude?
Let's do it. How are you?
I'm doing well. I love to see that you're just down in the old Alabama construction accounting cockpit, just saving the fine contractors of America from terrifyingly nasty, dirty books.
Yep, that's what we do. It's our specialty.
That's what you do. That's what you do. Go ahead.
The home office here, not nothing fancy, but this is where the sausage gets made.
It's where the sausage gets made. I love it. And for those of you that are listening, Miller's got a long beard mount in the background. He's got a couple of yotes hanging up there. He's a real outdoorsman, and he's in his camo jersey, which I appreciate.
Yeah. I've got clients that like to joke about it, that if they're on Zoom with me, they expect camo, but it's really just, this is a good shirt. It's a Filson shirt, and it's always at the top of my drawer. And I just pick it, I've got
Filson needs to get you as a spokesperson. Go ahead.
I've got other clothes, but for some reason, clients always catch me in this shirt.
Dude, Filson needs to get you these. Like, you need to trademark that tagline. Filson at the top of your drawer.
That's pretty good. That's
pretty good.
That's really good.
That's really good. That's what I'm here for. Yeah. All right, Miller. Well, it was great having you on the podcast. We'll talk to you later, dude. I'm just kidding. Okay. Enough small talk. Everybody, buckle up for a little episode with Miller Bradford. Miller, give the listeners a little background on yourself, a little formal understanding of Builder Bookkeep.
Sure. So I officially started Builder Bookkeep in May of 2022. I actually had a different name. I didn't go all in on builders until a little bit later, but I don't know if we have enough time for that. But before that, I was the controller for my brother's construction company for like 2.5 years. So I started working for him in January of 2020. Turned him into my first client.
What's your brother's name again?
Mitch.
Because I met Mitch at a Builder Trend University years ago.
Yeah, we went to BTU.
So I actually liked Mitch before I liked you.
Yeah, I probably met you too. We went to BTU in February of 2020. So a month after I started, we drank the Kool-Aid together and we went. And, small world, met you, 2 or 3 years later. When I launched Builder Bookkeep, Adaptive was just showing up on the scene, and been great friends ever since. But turned Mitch into my first client in May of 22. So that was like 3.5 years ago. We just crossed 80 clients last week.
Mm-hmm. Dude, that's awesome. Congrats.
Yeah, thank you. Probably 60 something of those are builders. I don't know the exact number, but we also work with, long story, but before I went all in on builders, we had, we picked up some other clients. But I think we're about 15 or 16 employees now. We had 2 start this week, so I can't remember exactly what the number is, but we're growing, man. It's been really hard, but it's been good. Really blessed to get the clients that we get. Sometimes it's hard to even believe, kind of pinch myself that clients choosing to work with us, and I have a growing business, and super grateful. Lord's been good to us, but it's also hard. We get like 4 clients a month, and just onboarding is time consuming, and it's all good though. Builders need a lot of help, and I think we're really good at what we do.
100%. I couldn't agree more, and it's exciting to hear that you guys are growing like a weed over there, because we hear a lot of really good things. We've had some like cross pollination of our clients and your services.
Yeah.
You've just formally joined the adaptive accounting partnership squad.
Yes.
So we're stoked to be working with you on a much more intentional, deep relationship.
Likewise.
But aside from that, dude, okay, so you're doing construction accounting and bookkeeping for builders.
Yes.
You're starting to provide more like controller level and CFO work. Is that right?
Yeah. We kind of stayed out of it for a while because I felt like I was going to be the bottleneck. And so I felt like it was easier to hire and train bookkeepers than it would be to hire and train CFOs. But
Yep.
when I hired an accounting director who is way better at construction accounting than even I am, that's what gave me the confidence to really launch CFO earlier this year. And so we did, and it's going really. We kind of did a soft launch to just, our clients. Like I even handpicked clients to kind of reach out to that I thought would use us, and that we could, even learn from them as well as just figure out what builders wanted in that service. And we had a few people sign up. I mean, immediately, and then kind of kept developing the service, and it's a really good service now. So we publicize it now. Every new lead we get, that's an option that they get to pick from, and it's really good. I mean, it really helps those clients really know their numbers. Like they know
Totally
everything about what the past and the future. Like, we tweak the future depending on changes made in the field, but they know how much money they're going to make this year. And some of them know how much money they're going to make next year,
Totally.
So it's been good. Yeah. It's been a good,
which that's what we're all about here on the show, right? Is talking about, ways that, that builders can be less intimidated with project financials. And actually some feedback that I just got from a regular listener, which I appreciate. And for those of you that are listening, your feedback is always welcome. You can find me on Instagram. My handle, or whatever it's called, is Adaptive Reece. I'd love to hear from you. DM me. But some of the feedback that I got is they really like to hear the stories from in the trenches with builders, the trials and tribulation that they come across. So that's what I want to talk to you about. I mean, hey, who better to talk about the war stories that builders go through when it comes to financials than somebody who works with dozens of construction companies for accounting.
Yeah.
But I do want to preface, I don't want this to just be like a downer, like a buzzkill. I want it to be like, yeah, this sucked and this was brutal. And yeah. So like, I think like those are some good stories, but I think like we should focus on pulling some of the positives out of them. Okay. So I guess just like more directly, I mean, you're working with residential construction. Do you work with any commercial, Miller?
No, it's more like we've got some residential guys that do some light commercial as well. So
sure.
We don't have anybody that's like just commercial.
And I always forget, is light commercial the light? Is that spelled LITE or is that LIGHT? That was a Miller Lite joke. Okay. Hey, Miller.
Yeah,
I've got the Miller Heavy.
I mean,
I've got the Miller Heavy on the podcast.
How many Miller Lite, jokes I've gotten in my life?
Yeah, no man, I'm sure
it was always Miller time, like in basketball. Yeah,
I love it.
But no, I thought you were asking a serious question. Light commercial, I guess, is just small commercial jobs, right?
I'm familiar, Miller. I'm familiar, and it was a joke. It was a joke that has gone too long. We're gonna take this. We're gonna old yeller this joke here.
Yeah.
Okay, so trials and tribulations. What? And I mean, you can we don't want a ton of dead space here, but just what are some war stories that you've come across with builders when it comes to tracking books? Obviously, we want to leave names out of here, but
yeah, I mean, I've come from being in house, right? So
yeah,
I could share stuff where people would obviously know who I'm talking about because it'd been my brother, but I'll skip.
Dude, Mitch's books are perfect. Well, Mitch's books have been perfect since May of 2022.
No, since January of 2020.
There we go. There we go.
But, I mean, he had some stuff from when I took over that had to get corrected. But the problem a lot of times is project management software not in sync with QuickBooks,
the classic
Builder Trends, Builder Trend actuals aren't matching QuickBooks actuals. What happened? Well, you got to enter those things there, push them to QuickBooks, and then you'll get started on a on how manual that is and stupid it is. But um,
Hey, I the beholder. Some people love it. Some people love it.
Sometimes it's as simple as like bills just weren't entered. Like bills slipped through the cracks in the email and they never got entered, and it looked like you're making more money than you were, but in reality, you just didn't have some bills in there to pay. And then they hit you up later. But,
Totally.
The solution, I mean, other than just managing your inbox better, would be a WIP report, would show you if you're over or under billed. Like, do you not have actuals to line up with your invoices to customers?
Yeah.
You would, so it looked like you're overbilled, and then that'd be a red flag. Like, are we overbilled, or why? What happened? But other things from the trenches. I mean,
we can make this a little bit more conversational. I don't mean to put you on the spot here, but when it comes to WIP specifically, or even just like the tediousness of getting the data that populates a WIP report, that's a lot of conversation that we're having over at Adaptive. We just rolled out our WIP tool, and there are several other products that have WIP tools out there, but just as we've been validating this with our customers, we've had a lot deeper understanding of what WIP actually is. I think we were operating more so under the wavelength of that it's a report, like it's an accounting report, and how can we solve this friction and challenge with construction accounting professionals. But it really sounds like it's more of a, I'll share what we've gathered, but I'm curious before I skew your understanding of WIP, how would you explain WIP and what WIP actually is in a business?
Well, I would have been bent towards the same thing. I mean, that it's a report. When you think of it from a monthly perspective, it's a tool to calculate over under billings, right? At the end of a month, you can adjust that month for over and under billings on the balance sheet and look at your books on a percent complete basis, which I think everybody should be doing, at least monthly. And then if you need to adjust that annually, if you're wanting to do your taxes on cash or completed contract or whatever, like make those adjustments annually. But I would look at them monthly, percent complete, so that you understand how you're actually performing every month. But if you're talking about a WIP from a daily or weekly perspective, it's like just tracking job progress, tracking like who you should be invoicing today or not, which is still talking about underbillings. But to have a live WIP versus like a monthly WIP report, those are two different things in my opinion, but Adaptive.
In what sense?
Adaptive,
I think you're
doing both, right? So,
yeah.
But in what sense? I mean, like the report aspect of it is monthly, like to adjust financials on a monthly basis. I wouldn't adjust them week. I mean, you can adjust them weekly, I guess, for underbillings, but
time out. So, and even just for the listeners, this is how I digest it. Correct me if I'm wrong, Miller, but the monthly WIP report is important, and what the month has to do with anything is when you close out your books on a monthly basis. Right. It's like you're closing out the books, you're reconciling accounts, you're making sure that everything is accurate, squared up, and is reconciled.
Right.
And then what the WIP is doing is it's indicating and showing what should we properly be reflecting from a balance sheet standpoint. Is this income an asset or is it a liability? And that's in large with has the work been done or not, or the percentage of the completion of the project.
Yeah. Or do you have the bills and expenses that to back up the amount that you've collected from the customer, like, or is this money that you've received really just a loan from your customer until you actually go pay for the labor and materials,
Correct.
Yeah. So that's what I mean by monthly, a report used to adjust your books for closing a period. But like, this is going to bring up another, thing that I notice that builders struggle with is keeping for the WIP to be accurate. You got to have a budget and an updated one. Cause like A good WIP report will show you slippage, like has your gross profit gone down from the original?
Mhm.
If so, are the numbers entered right, or did something bad actually happen?
Mhm.
There's like a few KPIs like that you want to check on a WIP. And that's a daily, weekly, monthly thing, like keeping budgets up to date, and then with adapt,
Totally.
your actuals are always up to date. So like you can always see if you're over under billed, right? And then that tells you when to invoice. Um,
Totally.
so that's what I mean by a monthly report versus a live WIP report. Two different things.
For sure. For sure. And I think that's where, go ahead. Were you going to say
No, that
something?
was it.
Okay. And that's where, like, that's kind of where our learnings were, because, like, again, from an accounting standpoint, it's like viewed as like a monthly report as we're closing out the books and adjusting the balance sheet. Whereas, like, there's even a communication component that happens with the accounting professional that is analyzing and building the WIP report. But when it comes to like the actual field application of it or the builder application of it, it can be used as more of like a weekly report that can be reviewed on a daily basis, in the sense that when we're talking about all the inputs that goes into a WIP for that to be meaningful for the business, it's like we can now communicate with our team on a weekly basis, preventing a monthly WIP report that is littered with errors and uncertainties that is now effectively delaying your ability to close out the books.
Yeah.
Whereas if we move this into a more of a management tool, right, with our team,
Yeah.
and we're reviewing WIP by, say, project manager, now in our weekly meetings, we can be reviewing WIP and saying, hey, Jeff, hey, Tina, hey, whoever the project manager,
Yeah.
why are we underbilled on this? Or why are we overbilled on this? Or shouldn't we be invoicing this? Or why are we showing more costs than we should be? So then you can start sending your team down on a weekly basis to ensure that, again, you're running cleaner, more accurate financials.
Yeah. Like our change orders done. Like, have we gotten bills from subs for change orders, but we haven't actually put in the change order?
Exactly.
Yeah.
Exactly. I think, and this is great from like a it's turning into kind of like a WIP podcast, which is fine. But like, I think the problem with podcasts is there's like a lot of this fluffy, this is how I should be doing it, right? And like that's a part of education, right? It inspires people, and they should be like, they have perspective that they probably wouldn't have. But I think the meaningful part is like tactically, what does that look like, or the alternative to not doing things the right way, right? It's like I could listen to like Alex Huberman, right, and hear about how, like, nicotine is good for me or bad for me, or getting 8 hours of sleep or 7 hours of sleep, or like all these things. But it's like, I don't know if I'm going to do that until I really know like what the downfall is. Tying this back in, what, like, okay, this sounds great. Weekly WIP, monthly WIP. I bet there's listeners out here like, damn, that's a pipe dream. Like, I would love that.
Yeah.
But like,
once a year for, like, if their tax accountant asks for a rough estimate.
dude,
Yeah.
once a year. I mean, is it safe to say that you're essentially flying blind
I mean,
if you're getting WIP once a year?
if this, if this doesn't tell you anything, like, we can do someone's books without doing a WIP report, but we will not. We require a WIP report for CFO services. I literally tell everybody, I will not tell you how much money you're making or not making if we don't have a WIP report, like, to see if you're overbilled or underbilled. Like,
Mhm.
Until I know how over or under you are, I don't know how much money in the bank is yours versus your clients,
Mhm.
versus your subs, whatever. I can't tell you how much money you're making until we do a WIP report.
Totally.
So,
And go ahead.
yeah,
Go
so
ahead.
like that's, monthly at a minimum, for sure. Monthly at a minimum. I wouldn't do weekly unless you have a tool like Adaptive to, like, automate the process a little bit more to look at it weekly,
Mhm.
But
Why? Why? I mean, and like, I don't know if you've listened to the podcast. You probably haven't because you're busy. But I don't like this to be like a huge plug. Like, I'm not going to tell you don't talk about adaptive, but I don't want this just to be like a big infomercial. I think, but like when you say like if you aren't on a tool like adaptive, you shouldn't be doing weekly WIP. Why is that?
Just because it's manual, like it's more manual than it's worth. Like, what is it? The juice ain't worth the squeeze or whatever.
Sure.
Like if you're gonna calculate it manually, monthly is good enough.
Sufficient.
Yeah,
Yeah.
like it's sufficient. Like at least you're better than probably 90% of the rest of builders. If you're
Mm-hmm.
doing an accurate monthly WIP report. Um, but obviously, if you've got a tool like Adaptive that helps automate the entire process, and you can do it weekly, you're gonna be that much better. And
Mm-hmm.
like you said, having those weekly meetings with, if you got other staff involved, like you've got KPIs to actually talk about every week. If you're going to meet, versus like if you're going to use a project management tool, like you can manually go look at each budget and see and search for red flags, but a lot of those can be spotted much quicker on a WIP report, or the
Mm-hmm.
WIP view of your jobs and Adaptive, if we are plugging Adaptive.
Totally. Totally. Okay. For sure. What are some of the horror stories of, like the outcome of not running WIP? Like what is the detriment?
Just thinking you're making more than you are, when in reality it's like you're billing in advance for stuff that you hadn't been billed for. Like yeah, framing's done, but did your framer send a bill? Or is he 6 months late on sending you a bill? But you've already recognized that income and thought you're king of the world, because you look back at your financials and it looks like you're making money but you hadn't paid the bills.
Totally.
Or like some people that don't do a WIP just aren't even keeping good budgets. Like
Yeah.
I had someone say, uh, it's just a good endeavor. It's like it forces you to make sure your budgets are up to date. Like
Yeah.
if the builder doesn't know what the new expected budget is, then the homeowner definitely doesn't know.
For sure.
So like I think every builder should be updating their clients at least once a month on their budget. Uh,
Mm-hmm.
so change orders got to be up to date. All your actuals got to be in there. Like WIP report would force you to do that if you're going to do it right.
Mm-hmm.
Um,
I want to touch on a little bit more with the like it, framing is done. You've recognized that revenue, that income,
yeah,
but you haven't received an invoice for it yet.
yeah,
That gets flagged in a WIP report very easily.
yes.
Right.
So I was talking about
But go
a
ahead.
fixed price job, right, where you're
Mm-hmm.
billing the customer when work's complete, not just when you get a bill.
Mm-hmm.
So that's, yeah. And a WIP report, that would be an overbilling because you don't have the actual bill to back it up.
Sure. And then when you receive the bill, it would bring it back to neutral
Right,
or properly billed.
right, right.
Is it possible to prevent those types of situations being, say, overbilled without WIP reporting?
I mean, if you're, it's really hard, but if you're cost plus and you try to bill for 100% of your costs in the same month, recognize income and costs in the
Mm-hmm.
same month,
Mm-hmm.
it makes for a really tight monthly close timeline.
Mm-hmm.
I would not do that without adaptive. Like, but you also got to make sure you close the books. Once you're done billing for that month, you don't enter another bill dated for that month, even if you get it 2 weeks later where it's backdated. Date it for the first of the following month. But yeah, if you close the books and QuickBooks, all that's possible. And then if you're 100% billed out every month for 100% of your bills, then you're never overbilled or underbilled.
Yeah.
Um,
Yeah.
but that, to me, that process is harder than just doing a freaking WIP report. what I like to simplify it, I'm like, bill half your customers, the first week of the month, bill the other half the third week of the month, do a WIP report that solves for all over under billings, and then you're not having to invoice all your customers all at once in a short time frame for everything, and make sure you include everything so that your numbers make sense. Like, people spin their wheels a lot on that process, whereas doing a WIP report could take 30 minutes, or less.
Sure.
If a DAB is up to date, it takes 3 minutes to do a journal entry.
Yeah. Yeah.
Um,
I mean, this sounds like it's like obviously it's important, but I think you've added some like really good color and context to it. Even just from like the devastation of recognizing more income than you should be, which again, like you use the example of like the framing might be done, but you're not going to get an invoice for it for another 6 months. And then how many of those go just like unbilled?
Yeah.
Right. Or you receive that invoice 6 months after you've CO'd the house. Right. And now you're going back to the client begging, or you're anticipating that you crushed margin on that job if it's fixed price. And then all of a sudden you get this $80,000 invoice and you're like, shit, we didn't make any money on this.
Yeah. No, if it was cost plus and you were doing a WIP report, you would not have that issue of 6 months later getting the bill and not wanting to go to the customer. Because like you would have seen, if you're keeping an accurate budget, you would have seen that you're always like 98% complete or something, and you're like, why am I not showing 100? Do I have all my bills?
Yeah.
There's a lot of other issues on a WIP report, but I don't think this is a WIP podcast.
Yeah, no, but this is fine. I think, I mean, just going like, again, I think this is, like kind of like the theme, I guess, of this was to like talk more about the trials and tribulations that builders go through. Yeah. And I think this is a big one. I mean, I do like whenever I talk about adaptive, it's more of like, what is it? Like, well, we've got automated AP, right? We've got automated expense management. We've got budgeting. We've got draws, vendor compliance, POs, lien waivers, payments, all the stuff that happens with back office. And it's like, oh, so like you'd replace bill.com. And it's like, okay, well, but like, that's not like,
it's one of the,
if you're, it's one of the things, right? So when you really look at like these types of solutions, and again, not to plug adaptive, there's just more to add color. It's more like when you're looking at WIP, it's really like the output of all the different inputs, the bills, the receipts, invoicing customers, and then all those other little things that get in the way that prevent you from understanding those numbers.
Yeah, there's a lot that has to get done right before you get to the WIP part. But if all that's done right, the WIP can be a non-event, Like, the WIP's only a painful event if you haven't done those other things, Like, one of the other issues is just, if you don't know your revised contract and your revised costs, the WIP's not going to calculate right.
Right.
If you can't tell me exactly what your gross margin is going to be on this job, then over under billings is going to be completely thrown off. There's a big difference in 15% and 16% even. Like, go look at like a big job and what that does to over and under billings. Like, it'll flush itself out when you close the job out, but you want accurate numbers monthly, not just when you close out a job, that a job that went on for a year, 2 years, whatever. Like,
totally.
You want that stuff to right every month. So
totally.
Yeah, that's the other big issue, is just not being able to tell me your contract and cost estimates, like the new ones, the ones after change orders. Like, can't do a WIP without that.
Totally. Well, and I think even to this, like this monthly concept, right, of WIP is like, you could go as like, well, if I just started running, like if I ran every day, I'd be in great shape. Or it's like, well, if I ran once a month, I'd be in great shape. Or it's like, okay, fine. But even what this compounds into is like closing out books accurately month in and month out. And actually, like we just passed, what was it, October 15th is the last for extension on taxes for individuals or whatever. We're April 15th is going to be here before you know it, because we're getting ready to roll into the holidays.
Yep.
People are going to be long year, weeks off over Christmas, weeks off over Thanksgiving, New Year's, and then we're going to get chugging again. And then it's like this like mad dash in January to close out the books and get everything tidied up for taxes.
Yeah.
What do you, I mean, for those of you that are listening, Miller's just like rolling his eyes over here.
Yeah. I mean, January.
Go ahead.
January is the rut where I'm at, for deer hunting, and I never get to enjoy it.
Yeah. Wait. Explain that. Explain that one a little bit. What do you mean, the rut for deer hunting? You don't get to enjoy it? What do you mean?
I don't get to hunt it like I should, because.
Wait. So you're talking. So the rut's actually in January in Alabama?
Yeah. Was it like in November where you're from?
Yeah. It's like November.
Yeah, dude. It's like Martin Luther King Jr. weekend every year where I'm at.
Dude, I had no idea. That's wild.
Yeah, I know.
I've shot a lot of deer. Never down there though.
I've shot more.
No, you haven't.
No, like, yeah, you hear about, Illinois, it's like November or whatever. It's like, God, that'd be awesome.
Yeah.
We like, we get it in, I mean, some areas of Alabama, it can be late December. But
yeah,
like the majority of people, it's second, third week of January. But
that's kind of boring, dude. It's like being able to kill deer in the fall. It's just like, it's just iconic.
I mean, deer season's open, but they're nocturnal and they're, pressured and hunted by everybody.
I don't know. You guys in Alabama are probably used to killing them with spotlights, aren't you? Shooting deer at night. I'm just kidding.
Well,
we're gonna get in trouble for this podcast. We're gonna. No. It was a joke.
Yeah,
that was a joke. Okay, but going back to it is you can't enjoy deer hunting because you're just like wild goose chase trying to clean up books.
Yeah, I mean, we ask for stuff all year. Obviously, like it's a two-way street. Whenever you work with us, like, we're not mind readers and we're not the FBI. We can't access things that you haven't given us access to, So if we're asking for loan statements all year and then we don't get them until January, well, now we got a whole year to fix. But
that's all preventable, right? And this just goes back into like just the complete frustration with like the lack of priority and just the clunkiness and labor intensive and detail oriented nuance that comes with construction accounting. Is it's like, if you were closing your books out monthly, which is like bizarre that's like the gold standard, and like if you can do that, that's a really big deal, which is why people would hire you. But the point is like, if you're closing your books out every month and it's accurate and you're reconciling it against a WIP and you're following this stuff month end and month out, you are going to save years off your team's life in Q1 of the following year, because now you're not like trying to find out where $15,000 in uncategorized or miscategorized receipts are.
Yeah.
Right?
Yeah. No, we have, our clients tax accountants don't even realize that, we've got their stuff ready in January, right? They just assume that it's a builder and they're not going to look at it until September, like before the extension deadline. They don't even know that like they could have done it.
It's just, but it's like, but then it's like, it's not just like this huge, like finger pointing blame. It's just the reality of what it is or what it was rather. Right.
It's changing, but no, it's just the industry. Yeah.
It's the industry, but then it's like, I mean, if you like, you're like, let's just even think of like an in-house bookkeeping team, right? It's like, do you really think that Paul or Becky, the office manager, is going to just habitually hound Frank, the project manager, to turn in and categorize his receipts? Or at some point, are they going to be like, dude, this guy just isn't going to turn in his receipts, right? Yeah, you can't change them, right? And it's like, so I get it, but also I think a lot of that, like there are tools, shameless plug, Adaptive, that will help with that. And that's, I think, just like, I think more broadly is like some of these, I want to hear from you the war stories of like getting taxes cleaned up and like this mad rush for the people that aren't closing books out month end, month out, and how closing out the books in December should be no different than closing out the books in April,
Right.
which are effectively closing out your books for the year.
Right.
Right. When you don't see builders doing that, what is a poorly closed out bookkeeper or construction company look like?
Like where taxes are filed on bad books, because I've seen that. I mean,
yeah, that sounds like a hell of a one to unpack.
Yeah, I mean, we have to determine. I mean, almost every new client we get, we find issues from prior years, in tax.
Really?
Oh yeah,
everyone.
I said pretty much, yeah, pretty much.
Well, that sounds like 95% to me. Is that fair?
At least 80.
At least 80% of the people you talk to have erroneously recognized taxes.
I wouldn't say erroneously. They have some issue that we uncover for a prior year that taxes have already been filed on. Yeah,
but you can amend those, right? So like you guys can fix them.
That's what I was about to get at is, do you go back and amend those? Because that costs money, like just redoing a tax return, you got to pay for that. Or do you just, I don't know if the IRS listens to your podcast or not, but do you,
SEC is all over me, I'm sure. Yeah.
Do you just, adjust those in the current year, do a journal entry January 1st, 2025 for something that was really a 2024 issue. Those are the kinds of things we have to talk about with new clients, like every day. It's like, it's as simple as like, here's uncleared transactions that go back to 2021. Uncleared. Dude. I mean, this probably happened last week. You have uncleared transactions in the bank register from 2021, 2, 3, 4, and of course 2025. But your taxes are done. You want us to clear these out in 2025 because you're not going to go
unclear. What does that mean?
That means like,
if there's not categorized.
No, that means like a check has been recorded coming out of the operating account, the checking account, and it never got deposited.
Somebody was paid. You paid the plumbing guy.
No, an expense was recorded in QuickBooks that was not legit. It never actually went through, and so your bank balance looks in QuickBooks looks lower than in reality. It was recorded in QuickBooks, but never actually happened in reality. So it's either a duplicate or got lost in the mail and the sub never asked for it again. But it's usually a duplicate because they do ask for it again. And then someone just goes and creates a new check, but now you got two.
And the outcome of that is you paid someone twice, or
you deducted an expense twice now on your tax return instead of just once.
That's how you get in trouble.
Yeah. So do we go back and adjust that, or do we do a journal entry to force the bank account to reconcile for this year, and then offset it to cost of goods sold or whatever the check was recorded in? It's stuff like that. But that's a very common thing. Just unclear transactions is one of the first things we go check for in a cleanup.
Dang. And what is the money impact? And when I say the money impact, like how does that impact the business or the owner's wallet? Or does
it does. I mean, that was extra deductions that they picked up previously which they shouldn't have. If they were audited, they would be removed. Those deductions would be removed because they were duplicates.
And then they would owe tax on
back taxes on that. And then the impact if they don't get audited, the impact is we adjust for that this year, which is reducing the amount of deductions you're taking this year, so you're going to pay extra taxes this year that you should have paid previous years.
What do those numbers look like? Like, is this like, oh shoot, like we found like an extra $5,000 in uncleared checks?
20 grand is very normal. Like, your QuickBooks bank balance is off by 20 grand, but I mean, it gets up there. I mean, we get clients that
years over years.
Well, we get clients that haven't filed taxes since 2020, and this is 2025 right now.
What?
So that's a bigger cost thing to talk about, because when you go file those, now you've got late fees and interest to pay to the IRS on all, if you actually owe taxes on all these 5 years. Um, and that's just poor management. You could have hired someone to do that. You just didn't.
This is like A, negligence, but B,
Yeah.
I mean, dude, this is like, okay. I just want to put this into
We're
context
probably making
here.
some people feel good about themselves.
Hopefully,
Yeah.
that would be great.
Yeah.
That would be great. If not, I think it's like this is a conversation that like should certainly get talked about. But it's like, let's say we're running a $10 million a year vertical new construction company. Okay, it's like I'll hear like, depending on where you are, 15 to 20% markup, which I hear typically builders are running about 10% overhead. Meaning, if I've got a $10 million company, I've got about $1 million a year in overhead,
It's pretty fair.
leaving me about $1 million in net.
Mm-hmm.
$10 million company, net profit $1 million.
That's a good goal. 10% net's
That's a
10% net's a good goal.
is it a reasonable goal?
Yeah, it's reasonable, but it's
Okay.
a good
Okay. It's an
good
attainable.
yeah, it's attainable. It's not like crazy. We see people higher. We obviously see people a lot lower. That's a good but attainable goal.
Okay. So we're talking a net million on a $10 million a year new construction company. When we're talking about not paying taxes for years or uncleared costs or errors in these books, again, that all relate back to WIP, what do some of those sums look like?
Yeah, the most common thing we'd see for a company that size, we would normally, the issues we would see would be about the WIP. So
Mm-hmm.
you've got a job that carries over a year, so you start
Mm-hmm.
you start at 1 year, obviously doesn't finish that year with these size
You
jobs.
start it in April and you close out in the following April. It's a 12-month project, but it covers 2 years.
Yeah,
or 2 calendar years.
Usually more like it closes out in June or July the following year.
Sure. 18-month book. Okay, cool.
Normally an issue we would see is WIP's been calculated wrong every month, including December, and so it's because they've got their revised costs and revised contract numbers wrong.
Mm-hmm.
So let's say they were including project management, and in their estimated cost numbers, but they weren't tracking project management as a cost in their actual numbers. So you weren't comparing apples to apples when you're looking at your expected gross profit and then your actual gross profit billed to date.
Mm-hmm.
So you're just grossly like screwing up the over and under billing calculations. And then when you close the job, you correct it, because it's like, okay, all final numbers are in. That job gets removed from work in progress into the completed contract, and it's no longer included in over under billing adjustment. And you've got a couple $100,000 swing. I mean, it can be that big. So that's either like you either paid too much or too little in taxes for that in that scenario. But for all your jobs, though, that carried over.
Okay, so and that's going back to the example. And again, I just want to math this out. So correct me if I'm not tracking. But we'll use the $10 million a year business. Again, it's gunning for a 10% net, $1 million. If I see, call it a couple $100,000, just to be technical, $200,000 swing, you're essentially losing 2% of the total price in the job, or 20% of your net profit.
Or it's just, it's calculated wrong. And when you go to make that correction, you just see a entry that doesn't make any sense. Like, why did, like when you figure out your mistake, when do you correct it?
Sure.
But yeah, when you look at the year and you're like, okay, we're showing underbilled by like 500 grand, because we miscalculated our numbers on the WIP when we're really underbilled by 100 grand. I mean that happens. Like we catch that on new clients that like when we take over a WIP, they were doing a WIP previously. This
Mm-hmm.
happened last month, and it was that on a couple jobs they were 100. They were about 100 grand off on each of them. You know,
Damn.
and they think they're making more money than they are. You know,
Yeah, and then but so then that get when that comment of you think you're making more money than you are, like that to me, like you're so what you're suggesting is that's actually coming out of their wallet.
yeah. I mean, it's like they're making decisions based off of the financials they're seeing. This is the hard part about doing a WIP, I guess, is like if you're going to do it, do it right.
Yeah.
Otherwise, you're going to be doing this adjustment to your books that better be right. You know,
Mm-hmm.
um, but yeah, that's the problem is they're making decisions based off of this net income number they're seeing on their P&L, but that's after making a WIP adjustment to get to that number. And they think they're making more than they are. You know, so
Totally.
they might be their spending might increase.
Mm-hmm.
Like they may think they have more room to hire more people or increase their overhead when we go and fix it. And it's like, dang, we didn't have that money. You know?
I mean, and that's even like to go into this like 500,000 to 500,000 to 100,000. Like that's a lot of what I mean. You go out and you buy equipment,
Yes.
you buy a truck,
Yeah.
you buy
Yeah.
you say, hey, it's time for us to get a showroom.
Yeah.
Right? This is
Yeah.
I can finally hire the 2 project managers or whatever.
Yeah.
Right?
Yeah.
And then you hire them, and then you're like, oh, actually that's not right.
Yeah. Well, I've already hired these.
And then you're sitting there, you're like, shit, I've already committed.
Yeah.
Go ahead.
Yeah. That's what I was saying. It's like I've already hired them. I'm not going to fire them in their first week.
This is a big deal.
Yeah. I mean, getting the WIP right is crazy important. I mean, if you're going to do it, you better know what you're doing.
I want to get that out of your verbiage. It shouldn't be this if we're going to do it thing. Because again, I'm even sitting here saying like, I don't know, how do you operate without it?
Oh, I know. No, I agree. If I was running a construction company, no way I would not have a WIP. But
And guys don't do it because why again?
they don't know how. That's what I'm saying. Like, you better have someone that can do it. Like knows how.
Okay.
And people think it's simpler than it is. When we're talking about doing it, I mean doing it and adjusting QuickBooks for that. Like you got to know how to do a journal entry too. It's a simple journal entry, but builders don't know how to do a journal entry. And like check the balance sheet to make sure that it ties out. Check the P&L, check cost of goods sold on the P&L compared to cost of goods on your WIP year to date, and make sure that those numbers match. And like the over under billings on the balance sheet matches the WIP report. It's just another financial statement to add into the mix where they struggled, with P&L already.
Yeah. And again, I always try and like prevent biases from happening here, which I think maybe you and I are both biased, which is fine, right? It's kind of like builders thinking that they built the best product, right? I think you should be a little biased to what you do,
Yeah,
right?
a lot of it, yeah.
But I'm just sitting here. I'm just like, why? I don't even know how to ask this because I'm just like, this seems like such a big deal. Is there a threshold? Can you get away with running like a $5 million a year business without WIP, or should you be running WIP at all points in your business journey?
That's a valid question.
What do you think?
Tax accountants, I think, have different opinions.
Say 20. I think it's 20 million is somewhere you have to run WIP, something like that.
Well, I was thinking on the low end of the spectrum. It's also most people look at it not so much on like total revenue of the company, I think, but more of what type of projects are you doing and the length of those projects. If it's like you're doing projects that are more than 3 months, recommend doing a WIP, or if they're over a certain dollar amount. But like, I'm more like, if I'm a remodeler or a builder, I'm doing a WIP, unless I'm like a contractor. When I say contractor, I mean like handyman. I think a lot of people call builders contractors, but I call them builders. Like, you're building the house. You're a remodeler. You're doing a decent sized remodel on a house. But contractors to me are handymen.
Chucking a truck.
Yeah.
Yeah.
That's just how I use the terms. Not saying it's right or wrong, but
sure.
But yeah, if you're doing 100 small jobs a year, might not do a WIP. That's a lot of work. Might not do a WIP.
Yeah.
But that's how I look at it.
That's a pretty small or low benchmark, though. Is like longer than 3 months. That's like every construction project.
Yeah.
Unless it's like a bathroom, right? Or a kitchen, right?
Yeah. No, we have remodelers.
And even some of those could go 3 months or longer.
Yeah, we have remodelers doing projects that are a month that we include those on the WIP. You just have to have a system.
Yeah.
If you have a good system of doing the WIP, then heck, throw them all on the WIP,
Yeah.
But if you're gonna start a job and finish it in the same month, and you're gonna have all your costs and income in the same month, then obviously don't put that job on the WIP. It doesn't carry over months. So I didn't give you a definitive answer because there really isn't one. I think if you have a system of doing it, I would just do them all. But if you're doing 1 or 2 day jobs or week-long jobs, then those people just aren't going to do it. So I don't even try.
Totally. Okay, so I mean, this is like, and this was great. I think just like generally, like understanding what WIP is used for, but then also making it personal to the business owner, because it should be, and it mitigates a ton of risk.
Yeah.
Not just from like closing out the books and making sure everything's reconciled and you've got like an accurate pulse on the business, but even internally, like prioritizing this conversation with your team.
Yeah.
To be able to prevent this stuff from happening, which again that's how you get clean books. That's how you get to month end closes. That's how you get to December 31 or January 1st closeouts for a year.
Yeah. Yeah. I'm just laughing because this was not a WIP podcast. I thought
do we turn it into one?
We did. I thought we were talking.
What were you thinking?
I thought we were going to talk about change management.
Is that what we talked about before? Oh, dude, we totally did.
So,
damn, we're gonna have to have you back.
Warning to all future podcast guests: it could change in the middle of recording.
Dude, I actually, and this is great. I mean, this is one of the things. I'm a pretty off the cuff guy, and it's just warm conversation. I don't think it needs to be anything more than that, right?
Yeah.
But I'm gonna have to we're gonna have to get you scheduled again to talk about change management.
We were gonna talk.
Dude, I'm so bummed. That would be a great episode.
We're gonna talk about.
You were all prepared. How much time did you spend on preparing? Please tell me not much.
I mean, my slide deck is like 30 slides. No, I didn't prepare at all. I didn't prepare,
dude. Okay,
any of it. I'm under the weather. I'm like sick. If you can't tell, we took a long weekend. We were out of town. I didn't prepare.
Sounds like an excuse, Miller. Where'd you guys go? What'd you guys do?
We went to Callaway Gardens. So,
is that where they make the golf balls and golf clubs?
Yeah, I actually wondered that because when I was Googling Callaway, that was like what came up. But no, I don't know. It's in Columbus, or it's outside of Columbus, Georgia. But
they have golf ball trees, and golf club trees.
No, it's a golf resort.
That was awful.
It's a golf resort, but it's
Oh, cool.
We saw 2 famous people while we were there. So
I didn't see you down there. What are you talking about? Who'd you see?
Rachel McAdams.
She's an actress. Totally. What is she in?
Like The Notebook, Mean Girls.
You're a big notebook guy, aren't you,
No, I've
Miller?
never seen it. I swear, never seen it.
Yeah.
My wife recognized her. I know her from Mean Girls. Like Regina George from.
Dude, no. Hey, that's her?
Yeah, you didn't know that?
Dude, you saw Regina George at the Callaway Gardens?
Yeah, she's like,
Hell yeah.
she's in Wedding Crashers.
Oh yeah, she is. She's the Owen Wilson crush, isn't she?
Yeah, and
Couple of stogies. Why not?
and anyways, she totally did not want to be spotted. My wife wouldn't go talk to her, so she made me do it. And I went up to her and I was like, "Excuse me, are you Rachel McAdams?" And she just smiled and said yes. And then I was like, "Okay, my wife wanted to know," and I just walked away.
which which is odd because you're just like one of them. You're when I think of awkward people, I don't think of Miller Bradford.
Really? Totally.
You just walk up, you're like, "Are you Regina George?" She's like, "Yeah," and you're like, "Okay."
Okay.
Walk away.
Okay. She was there. She was there with her kids and her parents, I think. And whenever my wife made eye contact with her, she like put her sunglasses on and put a hat on, and like was trying to hide basically. But
Yeah, it's like, all right, Regina, I didn't do this to you. You did this to you.
I didn't.
You were the
You
actress.
chose to be famous.
Yeah, exactly.
And then we saw another actor, uh, from a show we used to watch. He's not that popular, but he was like one of the supporting characters on a show called The Resident.
Yeah,
You ever heard of that? You don't know
Never heard of
TV
it.
guy, are you?
No, I'm not.
Yeah.
I'm not. And it's just I don't know. I don't know. It's not like I'm like anti TV. I just don't find myself yearning for TV time.
Yeah.
I don't know.
Yeah, I'm not so much anymore. But it was weird. It's like it's not like a famous attraction spot, so it was weird.
Yeah, I don't know, dude. I think the bookkeeping business has been good to you, and you got 80 clients now. You're just enjoying the finer things in life with celebrities these days, Miller.
Look up Callaway Gardens. You'll know it's not that at all.
Dude, they have golf ball trees there.
Yeah,
They're freaking growing 9-irons from the trees.
I'm not even a golf.
This has got to be fancy.
Yeah, no, it's a family friendly thing. It was our son's fall break. We just wanted to get out of town for a minute.
Yeah, that's great.
Yeah,
That's great. Okay. The WIP King. Actually, the WIP King might be a little sensitive with all the no king stuff happening. You're the WIP I don't know, professor. How about that? The WIP professor.
yeah, yes.
I appreciate you. Any wise words that you would send the listeners off on their days with when it comes to WIP? Just a little harsh reality. A stern talking to.
Yeah, I would say you got to do it. The things to look out for though are, does your gross margin percentage look right? Your expected gross margin percentage, like new expected contract minus new expected costs. Is that gross profit what you're actually expecting to make? If not, the entire WIP is going to calculate wrong. And then just glance at the percent complete. You obviously can't be more than 100% complete on a job, so make sure it's not over 100. Make sure it lines up with what you expected, and then obviously check over and under billings and think, does that line up with what you thought? Did you really not invoice for that job, or did you get a deposit from a customer on that job? Like, just check the numbers, But if all that looks right, I would adjust your books on that to do a percent complete set of books so that you actually month to month see how you performed. And that's it. That's the shortest version I can give.
All right, you guys heard it. You heard it here first from Miller Bradford. Miller, where do the fine contractors of America find you?
Yep. Builderbookkeep.com. There's 2 K's in that.
BOKKEEP.
BOOKKEEP. Is that what you said? I think you left out.
Yeah, I think so, but I never realized that there was 3 doubles in there.
Yeah, I think you left out an O. Or play it back. I could be wrong.
Yeah. whatever.
Yeah, my calendar's on there. Miller at builderbookkeep.com is my email. Hit me up.
Love it. And I think one thing to note, it's Builder, singular,
Yeah.
bookkeep.com.
Yeah. We get Builder Bookkeeper. We get Builders Bookkeep. It's none of that. It's none of that nonsense. It rolls.
Simple.
It's supposed to roll off the tongue. Don't act like it doesn't. It's builderbookkeep.com.
You know what you should rebrand into?
What?
You should rebrand into Builder Book Kept.
Book kept.
Yeah.
Like past.
Yeah. The past tense.
Past
Dude,
tense.
when you work with Miller Bradford, your books are kept. There's no keeping.
It's active.
It's kept.
It's an active Builder Bookkeep. It's just ongoing.
Okay.
It's monthly, forever.
Yeah.
Recurring.
Yeah. I love it. Okay, sir, I appreciate you. Thanks for jumping on. This was a great episode. We just crossed into the hour mark. So we'll let you get back to your day. But as always, it's great catching up with you and chatting.
Thanks for having me. Appreciate it.
See ya.